FM.
Well, welcome back. And with me on the line, because as we were talking about technology and how it's connecting people from all over the world, and live from Cape Town is Caroline van der Merwe from SmartWage. Welcome, Caroline.
Thanks, Stephen, for having me.
Oops, we seem to have a little bit of an echo there. Are you with me?
I'm with you.
Very great. Well, we're hearing you twice. Hopefully it'll settle down. Skype, unfortunately, does that now and then. Caroline, we're living in crazy times for the most part, and there's a problem that you guys have come up with, I think, a really innovative and smart solution to. And SmartWage sort of sets the scene for that. But the challenge really is, and as you frame it in your own words, is that people should have access to the money for the work that they've done, and they shouldn't really wait till the end of the month before they can access these wages. And you guys have come up with a solution mostly for wage earners to assist on this. Tell us a little bit about that and how it works and what the benefits are.
Yeah, so the concept is earned wage access, and essentially it solves the problem of the outdated 30-day pay cycle. So in other words, the 30-day pay cycle was something established for the convenience of organizations decades and decades ago. And it's become a completely outdated concept, and yet it's a convenient concept, and it's something that has established a sort of a path dependence. And now if you see with the trends happening globally with the gig economy, people are being paid for the work that they do almost on a daily basis. And the corporate world is beginning to realize that they need to catch up on this. And the reason why the 30-day pay cycle is a problem is that you look at the payday lending industry, which is essentially an industry that should not exist, because it allows you to borrow against a salary that's coming at the end of the month, and you end up paying exorbitant interest rates. And in South Africa, we know that 80% of people don't make it to the end of the month without resorting to payday lenders. So this is a very clear problem that can be fixed through a concept like earned wage access.
That's very, very interesting. But in many ways, do you believe that the problem, what I'm trying to say is the problem may actually go deeper than that. And once you're in the cycle of loan sharking and borrowing against your salary, it becomes a bit of a challenge to get out of that cycle. But in essence, your solution offers a very simple way for people to access funds before month end.
Exactly. So our solution integrates essentially with employer payrolls, and employees access our services via WhatsApp and USSD, so that if they do need to access a portion of their salary before payday, they can do so on a transaction on USSD or WhatsApp in under 90 seconds. But Stephen, you're right in saying that there is an underlying problem, and we are under no illusions that this is a silver bullet solution to people's full debt problems. But we call it a debt cycle for a reason. People have a financial emergency in the month that say costs them 500 Rand. Our research that indicates that even legitimate lenders are offering about a 50% interest rate on that money. So if a person is paying that much interest, they are going to get into a debt cycle, because effectively they're paying a higher price for a basic service like medical care or something like that, that a person with higher income does not pay. So you get progressively into this debt cycle without any way out of it.
And that just takes us down this enormous rabbit hole of lending and responsible lending and all the rules and regulations around that. But the first major question, what is the cost to the company and the employee in this regard? Because obviously it can't be offered free. And we'll talk a little bit about the technology around it in a minute. But what is the cost for the employer and the employee with regard to utilizing a system like this?
Yeah, so we are unique in that we offer this service as a subscription-based service, and the employer is responsible for paying for that service. So it costs 30 Rand per person per month, and it's seen as an employee benefit. And there's no other fees associated with that, and absolutely no interest. And the idea behind it is that the employer that we work with is an employer who understands that there is this need and that the employees are often in financial distress, and offers a benefit to essentially take the first step to disrupt the 30-day pay cycle. And then from our side, from a profitability point of view, We have obviously a very low risk lending product because people are lending or borrowing money from us against payroll, which is obviously one of the most safe loans that a person can take. So we don't incur as much risk as a normal payday lender would incur, because we then deduct that money directly from the employee's pay slip the following time that they're paid.
So essentially what happens with your system is employee A is earning 1,000 Rand a month. At the beginning of the month, in week one, if he wants to withdraw, let's say 200 Rand for whatever reason, he can do that using USSD or a very simple mechanism to get 200 Rand into his nominated either bank account or cash account, wherever he wants it to go. And then theoretically, the employer owes you 200 Rand for that employee. At the end of the month, the employer pays you 200 Rand and pays the employee 800 Rand, and everyone's fairly happy.
That's exactly right. And one of the ways we've made sure that employees aren't taking money irresponsibly from us is that we've capped the amount that they can draw to 25% of their already earned income. So if they get through halfway through the month, then they have access to 25% of half of their salary. Because ultimately we understand that the 30-day pay cycle still is something very important in the market. So, people's rent is due at the end of the month. They pay their utilities at the end of the month. So you don't want somebody in a situation where they don't have enough money at the end of the month. You want them in a situation where they can build financial resilience by being able to access funds for any kind of unexpected or emergency expenses.
That makes a lot of sense. But then how do you manage or how does the employer then pay you directly? Do you manage the system that the employer then cannot pay the employee incorrectly and will obviously pay you the monies that are owed or forwarded by you to the employee?
Exactly.
And that's
so
the
we
technology. I think that's what we're talking about. What technology exists to make sure that this happens seamlessly without any overhead or hassle for the employer?
100%. So we integrate with all the major payroll systems, and that enables us to get the relevant data that we need to ensure that we're giving employees access to the correct amount. And then at the end of the month, there's a very simple reconciliation process, and that's also handled through the integration, where we are able to list all the individual transactions that come off employees' pay slips. Those map to the pay slips at the time of consolidation. And then the employer simply pays the employee their salary less the amount that has been drawn. Yeah.
And then the balance gets paid to you, and everyone's relatively happy with the whole setup.
Correct. So all it is just the timing of the person's salary has changed. So it's not actually a loan situation. It's just an employer instructing us as an agency to pay a portion of the salary early to the employee. But it is optional and it is on demand, only for employees who think that they need the service.
But obviously this can apply to salary, wage earners, anybody. It's actually irrelevant. So any employee can take advantage of this advanced up to 25% of their earned salary for the month at any point in time if they have an emergency. So I have to fix my car and I need 5,000 Rand. If I have that capacity within the system, it should be no problem.
Exactly. And instead of paying probably closer to 7,500 Rand if you were to go to a payday lender, you are paying nothing extra for that money because effectively you've earned that money. And that's the kind of mindset that we have when we create this product.
That's actually an incredibly smart way of working. And I think you make an excellent point. We live in a gig economy. We live in an economy where there's a direct relationship, well, theoretically, a direct relationship between earning and working. And yet we still work on a system where everything is very cyclical, and it puts people into a lot of challenging options. I mean, in a way, bank overdrafts play that exact same role for most people. They put the money in, and then they go positive, then they use it all up at the end of the month, and then they've got another hole in their pocket which gets filled by their salary. So it could actually work across the board for any employee.
Exactly, and it's something that sort of economists or those trained in economics can see as a very basic market failure that we are trying to fix, because the risk of sort of giving out money or lending money against payroll is such a low risk endeavor versus a third party like a bank coming in lending money to people.
And yet, today, with all the restrictions and the tight economy we got, borrowing money short-term from a bank or any one of the online platforms is an expensive endeavor. It's not a simple and a frictionless type of operation, which yours appears to be.
Exactly. I mean, we did some very basic research on the regulated lenders, and we found that they're charging approximately 280 Rand for a 1,000 Rand loan for 15 days. So that's around 56% interest per month for the regulated lenders. That does not count loan sharks and unregulated lenders. So the numbers are just staggering.
That's a horrendous statistic, especially in a country where, one, we've definitely got a fairly high level of inflation and where people are struggling to make ends meet. And here you've got people absolutely profiting at a ridiculous way, well within the Usury Act still. So it's legal, but it may be not the most ethical way to forward money to people.
Yeah.
And do you see, I mean, just a quick segue there, but do you see that this whole microloan and wage loan industry is actually unsustainable because the people they're trying to borrow from just simply can't, in the end, afford this type of thing?
Exactly. It's completely unsustainable and it's unethical, and it's something that we cannot go on with. And, you know, we could talk about the sort of macroeconomic issues of the rich getting richer and the poor getting poorer. And in fact, COVID has made that worse, not only in South Africa, but also in other countries. And so we're looking at a situation where there's a clear gap in the market and it needs to be fixed. But I also want to mention that we see this as an employee benefit, obviously, because it directly affects the employer's bottom line. If you look at things like absenteeism, productivity, employee retention, all of these things can be influenced by improving employees' financial wellness. And there's an education component to that too, which is something we include as part of our product. But there's also, you know, if an employer offers a benefit, it's for the well-being of the employees, but it's also for the bottom line of the business. It's a clear shared value proposition.
That's actually a very, very, very interesting thing, because how many employers today have the situation where their finance department, which is built on the 30-day cycle, gets constant requests for advances against salaries, and it becomes an onerous paper trail, especially at the bigger companies, to just access some of these funds in an emergency, be it a funeral, be it a car breakdown, be it school fees, whatever it is. It is quite a difficult thing for companies to deal with. So in many levels, it could be quite an easy way out of a complicated system.
Exactly. And again, we work with employers who really want to benefit their employees, but need to find a way to do that through the convenience of technology. And that's what we are building towards, is making it really just a plug-and-play system that allows employers to switch this benefit on for their employees.
It really does make a lot of sense. And let's explore the idea of education or financial education. Have you found that is a major problem within the market or the audience that is most affected by these microloans?
Well, this is a really interesting one, and education is financial education is obviously complex because there's many layers to it. It's people's background education that they have. There's also cultural issues involved in this. And finally, the thing we don't like to think about is a lot of people don't actually get paid a living wage or have far too many dependents on their wages. So education is complex. But what we wanted to do was, as part of our product, included in the subscription fee, is a financial education chatbot that walks people through case studies. And those case studies are around poor financial decisions and allow the employee to act as the financial advisor in the case study and understand if they make a certain choice, what the consequences of that choice could be. And part of the reason that we do this is we do want our product to be sustainable. And it's important that employees are educated to adjust to the realities of more frequent pay, because it's not an easy adjustment for any of us. And we mentioned earlier how a lot of our bills traditionally come at the end of the month and will continue to do so. So how do you keep managing that so that you use earned wage access in a responsible way? And that's what our education component tries to achieve.
Because that is a critical component. If people are used to the cycle of borrowing and lending and paying, and now you suddenly give them additional access, simple access to money, they could actually land up in a worse situation if they're not responsible about how the whole thing works, because they could have existing loan shark or even legal loan commitments which are unknown to the employer, and then your system could actually exacerbate that. Have you got a solution to that one?
Yeah, we've obviously thought very deeply about this. We're a company that is aiming for financial inclusion. And so one of the parts of the technology that we built in is a toggle to reduce the percentage access that individuals have. And in larger organizations, we often find that, it's used by employers as an incentive tool for people who have a longer tenure with the company, people who have no disciplinary action against them, but also people who are in a more healthy financial state. And so you find, an employer is often aware of all the deductions that come off, including garnishee orders and things like that. We're able to ring fence those employees and either reduce their access or block their access to the product to ensure that we're not adding to the problem. And so flexibility for the employer is really important to us.
And a last sort of regulatory thing, whenever you deal with money and other people's money, the government and the regulators get very involved. You're no way a lender of any sort. You're simply an intermediary, as I understand it.
Exactly. So we're providing the technology here. We're not actually lending money per se. So we are allowing the employer to, disburse salaries a little bit earlier. And we do carry that funding, but it's not something that falls in the remit of the National Credit Act, because we're providing a technology for the employer. Of course, we take data security very seriously, and that's the area where we take a lot of care to comply with all regulations, because we are dealing with people's personal information.
Now, obviously, now with the imminent sort of legislation around POPIA coming into effect in a couple of months, and some real teeth, that's something we've actually discussed in the show quite a lot. But the whole POPIA privacy thing has become an incredibly important component of what's going on in all our business lives and all our personal lives going forward. So obviously you're totally compliant in that regard, and you're very cognizant that you're dealing with very sensitive data at all times.
Yes, and I know sort of because it's unknown territory at the moment, people tend to shy away from these things. But ultimately, these regulations are really good. And they keep us as organizations accountable for how we treat people's data and ultimately protect them. So I don't necessarily see it in a negative light. There's some challenges around compliance, but ultimately it's in the best interests of our users.
Perfect. And as I said when we chatted earlier, time flies. Our time is pretty much up. How do people get hold of you? How do they contact you to find out more about the system? So give us your details and your website. And I just think it's a really smart way of using technology to solve a pretty perennial problem in South Africa.
Yeah, thank you, Stephen. We're really excited about it. So we have a website, www.smartwage.co.za, where people can get hold of us anytime, and we'd be more than happy to, explore relationships with employers who really want to improve their employees' financial well-being and want a sustainable solution to this payday lending issue.
Brilliant. Well, thanks so much for joining us, and I look forward to finding out more as it goes along and develops. But I think it's a great idea to considering that the pay cycle is probably one of the last things that have succumbed to the new way of thinking around technology. We all just get so used to earning our money once a month that we don't even think about it. So pretty smart you guys have come up with something that really does change the game. So thanks for joining us, and we will be in touch soon.
Thank you so much for having me, Stephen.
Pleasure. Bye for now.